We got alarm signals in the gold market. We got to talk about gold today because the way it's setting up, it looks like there's going to be a major fake out coming in the gold market. So we need to know what could be ahead for us as gold investors and gold mining investors. Let's get right into it. Important show today. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelm. If you're new to the channel, hit the subscribe button so you don't miss any of the videos. Like the videos where I told you that the line where the gold price is falling below the line of 4,500, that is the line of demarcation for the gold price. We fall below it, we close below it, confirm the breakdown. That is when stops get triggered. That is when institutions are going to sell. And as you can see right now in European trading, this line right here is under immediate pressure. So if you feel uncertain about the gold price, about what's going to happen, what should I do, don't worry. You got me. I'm here to help you. I won't leave you standing in the rain. We're going to have short-term strategies. We're going to have mid-term strategies. We're going to have long-term strategies. And then it's only about execution to solve this problem. So, whoops. I don't know what that glitch was. We know what the problem is. The problem is 4,500 is under immediate pressure. Okay, fine, we knew this. And I also told you that we're probably going to see a drop of $100 an ounce if this line falls. Also fine, because that would get us to around 4,400-ish, right? So basically right to the 200-day moving average. Okay, that is fine too. But is that it? If we break a line as important to institutions as 4,500, a line that has held the gold price up since the end of March, so for almost 2 months, is $100 really all that we're going to get on the sell-off? The last time we broke below, we got this big candle right here. That was a harsh sell-off of about, I think that was like $400. Yeah, $400 an ounce. Now, intraday, I get it. It got bought back up. But that is the reality that we have seen. So we have a problem in the gold market. And that is that the 200 is moving up quickly. That the uptrend that goes all the way back to the end of 2024, beginning of 2025. That was really when the run in the mining stocks, by the way, started. That uptrend is moving up quickly as well. So if we would get down $400 again on a sell-off, that would put us way below the 200 and also way below the uptrend, and would basically trigger sell signals to really go down to 3,500 and retest this historic breakout of this consolidation period that you remember well, that we saw last spring and summer, that we broke out of, and then that triggered the monster rally in the explorers that we saw. So that makes our strategy a lot more difficult. Because I've always said, I believe in the 200-day, but the 200-day is moving up a lot. So that would mean we only get a $100 correction after the break. We're probably going to get a fake out. That would make a lot of sense. Maybe even a fake out, as I said before in the previous videos. And if you missed the videos, hit the subscribe button. We break the downtrend for liquidity grab, go back up, maybe go below just a tiny bit below 4,200, because that's going to freak out all the gold bears and all the YouTube pundits that's going to come out and say, oh, it's going to be $3,500 an ounce. And then instead, we get back into the uptrend and we break to the upside. That is absolutely possible. But what is also possible is that gold is completely going to break down to 4,000, maybe even 3,500. Technically, it would go down to 3,500. I think 4,000 would be the floor, but that is still a lot lower than what I have been anticipating. 4,000 basically gets us here to this zone. Yeah. So that I've been anticipating. So how do we navigate this situation? Well, we know a big decision is coming on two levels. The first one, the bigger one, is this triangle formation. From the downtrend that we started at the end of January, converging with the long-term uptrend since December 2024, beginning of 2025. So we know this breakout is coming. But even before that, we're going to have a decision between the 200 and the 50-day, which, as you can see, are moving closer and closer, narrower and narrower together. And that will also send us a signal. I have always been a proponent that we're going to resolve this triangle to the upside. And I'm not changing my tune on this. But, here's the big but. What we have seen in May, in the gold price, emotions apart, just take away that obviously, hey, I would like to be right with my prognosis that I've given here for a long time. We just look at what has happened in May. The price action of gold has been disappointing, and that is sugarcoating it. I have already pointed out in previous videos how weak the bounces have been once we hit 4,500. Here and here. We had a bounce on Monday when it was Memorial Day in the US and Wall Street wasn't trading. And then as soon as the Americans came in, we got pushed back down. No follow through, no big buying in the States. What I really don't like is we're basically where we were a week ago. We are lower than we were, let's say here, last week, Monday. But if we look at the dollar has actually declined. Right? This is where we were a week ago. This is where we're now. Dollar has gone down. Nothing has happened to the gold price. Oil price has significantly gone down, which you would think would be good for gold. Nothing has happened to the gold price. But the biggest worrying sign is the bond market. We have a massive correction since the middle of last week in the bond market, as you can see here, making it look, at the moment, like this breakout was a nasty bull trap. On the 30-year, if we look at the 10-year, same thing with a downtrend. Big time sell-off in the past week. And what has gold done? Literally zero. Literally zero. We are exactly where we were a week ago. Even though all the major factors except the technicals have improved short term for gold. So you hit the big trend line of 4,500 short term. All the factors that have led to the sell-off in April and beginning of May, that made complete sense. We talked about it on this channel. If you missed these videos, subscribe button. Be so kind. It helps ourselves, but it really helps you out as well. Are working for you, and still not even short-term traders want to take the gold long bet right now. That tells us something. That tells us something. And that tells me that the breakdown below 4,500, it's coming. And now it's only a question of how low will we go. And we already have two scenarios. We actually have three scenarios, right? The first one would be fake out with a bear fake out with a liquidity grab below the 200, below the uptrend. And then we resume back into the uptrend and we actually break to the upside. Second one is we're only going down to 4,000 and not 3,500. So all the 3,500 people have their orders already there, but we never get there, right? The gold price bottoms at 4K. Central banks, which have been buying aggressively, going to increase their buying. And then we're going to start moving up. And the ultra bears are either going to sit on the short positions that they had and wanted to close around 3,500, or they're not in the market. And then they need to run and start to buy at higher prices, which then moves the prices up. Or the bears take a win on that one and we move all the way down to 3,500. I've talked about this before. This is where we get back into strategy, what we need to do. We need to adjust our probabilities and our strategy. So in gold, we got this 100% right because our strategic buy-in on gold in April, May never triggered. If you remember, if you saw the old videos, then you remember that I was saying we got to get above the 50 and we got to get above this line right here in order for the strategy to shift in terms of the probability of gold going higher increasing, and therefore we need to get in the market. So we're still sitting really pretty. So now we can adjust and we can put buy orders for a small percentage. I'm not your financial advisor. I don't know what you want to do, but I would say maybe do this 30-30-30 right now, right? So I know that's only 90. I get it, okay? I'm German. We are born with like being anal about math, okay? But you get the point. Third of a position around the uptrend right here, a third around 4,000, and then a third in case we do go all the way down to 3,500. Now, I can already hear the retail telling me, yeah, but then I don't get the perfect entry. No, you don't get the perfect entry. But you know what you do get? You get the probabilities in your favor, and you're going to be in with a third or two-thirds if scenarios 1 or 2 hit. This problem that retail investors have is that they think so binary, where they say, well, I got to be all in at the lowest price. So they have all their orders around 3,500 now, or equivalents in the GDX or GDXJ or individual mining stocks. Okay, but what happens if that scenario, which is only 1 out of 3 scenarios, if that doesn't trigger? Then you just got Cleveland Cavaliered. Got to bring in that Knicks reference at least once in these days. You just got swept out of the market and you're not in. So what does the smart money do? The smart money adjusts their strategy according to the probabilities and the different scenarios that could play out. So that means I want to have some positions in case it's going to be the bear trap scenario that fakes out all the bears. Meaning we go below the 200, we go below the uptrend, right? It's a bear trap, it's a liquidity grab, and we go back in and we resume to the upside. Because then at least I bought a third of the position at a really good price for that scenario, and then I can add to that position. At least I'm in the party, okay? At least I'm in the club. Now, while I'm in the club, then I can go ahead and say, hey, let me order the champagne and let me get the table over here. But if you have all your orders at 3,500 and it's only a liquidity grab and it's scenario 1 and it's we gonna turn this market around 4,200-ish in the gold price, then you're not even in the club. That is how you have to play it. Now, why would I put my orders above the uptrend and not below if we think there's a high probability of a liquidity grab, because that's what Wall Street usually tries to do to take advantage of the retail investors, because we don't know that's going to happen. So maybe we lose 1% or 2%. But that's okay, because we're going to be in this. Whew. It's going to be wild times this week for the gold market. You can follow it here on Hot Trades of the Day all week long. We're also going to cover silver. We definitely have to talk about the general market overall, the IPO craziness. Oh boy, a lot of retail investors are going to get fleeced on that one. That's all coming up in the coming days. Have a great day. Bye-bye.